Imagine buying a digital picture of a monkey for thousands of dollars, and then finding out anyone can right-click and save it to their computer. Sounds crazy, right? But here's the twist. Some people actually made millions doing exactly that. And others? They lost everything. So the big question is, should you invest in NFTs or not? Stick around, because by the end of this video, you'll know exactly what NFTs are, why people are buying them, how they could make you rich or broke, and whether they deserve a spot in your investment portfolio. Number 1. What exactly are NFTs? NFT stands for non-fungible token. Sounds complicated, but it's simple once you break it down. Non-fungible just means unique. Unlike dollars, where $1 is always equal to another dollar, NFTs can't be exchanged one for one. They represent digital ownership of something that's one of a kind. Imagine a rare baseball card. You can take a picture of it, but only one person owns the real thing. An NFT is like that card, but digital. It could be artwork, music, videos, tweets, or even virtual real estate. Example, the famous NFT called Everydays. The first 5,000 days by artist Beeple sold for $69 million at Christie's auction house. Sure, people can view the artwork online, but only one person owns the official token. Number 2. How do NFTs work? NFTs exist on a blockchain, which is a digital ledger that records who owns what. Think of it as a public notebook that no one can erase. Ethereum is the most common blockchain for NFTs. When you buy an NFT, you're not just buying a file. You're buying a digital certificate of ownership stored on the blockchain. That's what makes it valuable, or at least, what gives it the potential to be valuable. Example, owning a Bored Ape Yacht Club NFT isn't just about the art. It gives you access to exclusive online clubs, events, and sometimes even perks like real-world parties with celebrities. Number 3. Why are people paying so much for them? Let's be honest. The artwork itself is often not what drives the price. People buy NFTs for 3 main reasons: scarcity, status, and speculation. Scarcity. Many NFT collections have a limited supply, like only 10,000 unique apes or cats. Status. Owning a rare NFT can be like driving a Lamborghini online. It shows you have money and are part of an exclusive group. Speculation. People hope to buy low and sell high. Just like trading baseball cards in the schoolyard, except now it's digital and global. Example, someone bought a CryptoPunk NFT for just a few $100s years ago and later sold it for millions. Number 4. The risk of the hype. Here's the dark side. For every success story, there are thousands of failures. Some NFTs lose value overnight. A project might launch with lots of hype, but if the community loses interest, the floor price can crash. Example, many people who bought influencer-promoted NFTs at high prices saw their value drop to almost zero within months. Imagine spending $5,000 and seeing it worth $50 today. Number 5. Are NFTs real investments or just fads? An investment is something that can generate returns, either by growing in value or providing income. NFTs don't produce cash flow like real estate rent or stock dividends. Their value depends almost entirely on what the next person is willing to pay. That doesn't mean NFTs are useless. They could evolve into a new form of digital asset class. But right now, many are more like collectibles than investments. Example, buying a rare NFT is closer to buying a piece of art or a Pokemon card than buying a stock in Apple. Number 6. The technology beyond the art. NFTs aren't just about digital pictures. The technology behind them has serious potential. NFTs can be used for digital identity, real estate contracts, gaming assets, and even ticketing systems. Example, in gaming, instead of buying a sword that only works in one game, NFTs could allow you to truly own your digital assets and maybe sell them later. Example, a concert ticket as an NFT means you can prove it's authentic, avoid fakes, and even resell it securely. Number 7. The environmental debate. Some critics argue NFTs are harmful to the environment because they use blockchain technology, which can be energy-intensive. Ethereum has switched to a more eco-friendly system called proof of stake, but the debate about energy use hasn't completely disappeared. This is something investors should keep in mind, because public backlash can affect long-term adoption. Number 8. Regulation and legal concerns. NFTs are still in a legal gray area. Governments are catching up, but it's not always clear whether NFTs count as securities, property, or something else. Example: some NFT projects have been accused of being pyramid schemes or unregistered securities offerings. That means you could face risks beyond just losing money. You might deal with legal complications too. Number 9. Should beginners invest in NFTs? Here's the million-dollar question. If you're new to investing, NFTs are probably not the best place to start. They're highly speculative and volatile. For beginners, it's safer to focus on things like index funds, stocks, or even real estate before experimenting with NFTs. Think of NFTs as dessert, not the main meal. Fun, exciting, but not what you should live on. Example: imagine you have $1,000 to invest. Putting all of it into an NFT is like betting it all on one lottery ticket. Better to invest $950 in safer assets and maybe use $50 for NFT exploration if you're curious. Number 10. Tips if you do want to try NFTs. If you're still itching to dive in, here are some smart beginner tips. Do your research. Look into the team behind the project, the community size, and past performance. Never invest money you can't afford to lose. Use trusted marketplaces like OpenSea or Rarible. Be careful of scams. Always double-check links, because fake websites often trick people into losing everything. Example: a friend of mine almost bought a fake NFT collection because the website looked real. Luckily, they noticed the URL was slightly misspelled before clicking buy. Number 11. What could the future look like? NFTs might evolve beyond art into real-world applications. Imagine owning part of a house or a music royalty stream through NFTs. That could change how we invest forever. At the same time, if the hype fades and the world moves on, many NFTs could end up as worthless digital files. The truth is, no one knows for sure. Number 12. The role of community in NFT value. One thing that makes NFTs different from traditional assets is how much the community matters. An NFT with a strong, loyal fan base is more likely to hold value than one with no following. Think of it like a sports team. The team's merchandise only sells if people are passionate about supporting it. Example: the Bored Ape Yacht Club became so valuable because celebrities joined in, fueling a community that people wanted to be part of. Number 13. Utility-based NFTs. Not all NFTs are just pictures. Some provide access to special benefits, tools, or experiences. These are known as utility-based NFTs. Example: a business might create an NFT that doubles as a membership card for discounts or early product access. That means your NFT has real-world value beyond just being art. Number 14. NFT royalties for creators. NFTs opened a new way for artists and creators to make money. Every time their NFT is resold, they can earn a royalty, often around 5% to 10%. This is different from traditional art, where an artist usually only makes money from the first sale. Example: a musician could sell an NFT album and keep earning every time fans resell it. This keeps creators connected to their work and rewards them long-term. Number 15. Fractionalized NFTs. One barrier to NFTs is that many are too expensive for beginners. Fractionalized NFTs solve that problem. They split ownership into smaller pieces so more people can invest. Example: instead of buying $1 million NFT, you could own a fraction of it, just like owning shares in a company. This makes NFTs more accessible to average investors. Number 16. The risk of copycat projects. Because it's easy to launch an NFT, many creators copy successful projects without adding real value. These projects usually die out quickly, leaving buyers stuck with worthless tokens. Example: after the success of CryptoKitties, dozens of cat-themed NFT projects popped up, but most failed within months. This shows why doing research is so important before buying. Number 17. The role of celebrities and influencers. Celebrities often boost NFT prices by promoting them, but this can be risky. Some fans rush to buy just because a famous person is involved, without considering the project's long-term value. Example: a celebrity-backed NFT might spike in price, only to crash once the hype wears off. Beginners should be extra cautious of hype-driven projects. Number 18. NFTs in the metaverse. The concept of the metaverse, virtual worlds where people work, play, and shop, is closely tied to NFTs. NFTs can represent virtual land, clothes for avatars, or even tools used in digital spaces. Example: in Decentraland, investors buy virtual plots of land as NFTs, and some sell for hundreds of thousands of dollars. If the metaverse expands, NFT demand could grow too. Number 19. Liquidity challenges. Unlike stocks, which you can sell instantly on an exchange, NFTs don't always have buyers ready. This means you might own an NFT and want to sell, but no one is interested at your asking price. Example: a person who bought an NFT for $10,000 may struggle to find any buyer, even if they're willing to sell for $3,000. Liquidity is one of the biggest hurdles for NFTs as investments. Number 20. The learning curve for beginners. Getting into NFTs isn't as simple as opening a bank account. You need to set up a digital wallet, learn how to use cryptocurrency, and understand how blockchain transactions work. For many beginners, this process feels overwhelming and risky. Example: if you lose your private wallet key, you lose access to your NFTs forever. There's no customer service line to call for help. So, should you invest in NFTs or not? The answer depends on your risk tolerance. If you're a beginner looking for stability, probably not yet. But if you're curious and treat it like buying a rare collectible, then exploring NFTs with a small budget could be a learning experience. At the end of the day, NFTs are less about guaranteed profit and more about exploring a new frontier of digital ownership. Now I want to hear from you. Do you think NFTs are the future of investing, or just a temporary craze? Drop your thoughts in the comments.